Situation is boosting investor confidence. That's not me, that's the word coming in from Nilesh Shah of Kotak Mutual Fund. He spoke exclusively to Anuj yesterday. Very interesting tidbits coming in from that interview. But he also spoke about the payout of the 7th commission and how that could boost domestic sectors like housing, autos, etc. Listen
in. One, market is factoring in the two things which has changed in India. One is the path of fiscal prudence. We are the only country which is reducing fiscal deficit, whereas everyone else is, going up. Second, we are the only country which is having such a high nominal or real interest rate. Everyone else is on the negative side. So in a world where there is enough money going at negative interest rates, at the last count it was more than $10 trillion. They're looking for investment opportunity, and India provides that oasis in the desert. It's no longer one blind man, one-eyed man in the land of blinds. It's oasis in the desert. Where will you find growth? Where will you find ability to cut interest rates from 7.35 or 37% all the way down, and the path of fiscal prudence? I think the macro India, which has given so much of flexibility, is giving confidence to investors.
That's interesting because you're talking about good macro, but what's done remarkably well is the micro. I mean, the mid cap and small caps, they're just flying, Nilesh. Any reasons to get worried here with the quality of rally, or you think it's fine?
So there is some amount of flow coming into small and mid caps, and hence there could be pockets of overvaluation, but it's probably going to get healed by time corrections rather than price correction. Most of the mid-cap companies whom we are meeting today, they are still having capacity, they are still generating free cash flow, they are declaring dividends, and the promoter governance is at par with the large cap companies. So my guess is that bearing some amount of time correction, if you are in quality mid-caps, you still have room to go.
Okay, quality mid-caps, any theme that stands out for you, Nilesh?
For us, domestic economy is something which is working out well. There is about 1 crore central government employees who will get 70 to 80,000 rupees per head annually. There will be another 1.5 crore state government and public sector enterprise employees who will receive that next year. So this 70,000, 80,000 rupees individually will be spent, and wherever they will be spent in those areas, small, mid, large, will give great value.
Domestic fund flow situation is really intact, and that's been the most heartening aspect of all through the correction, that domestic funds remained intact, tells you that retail remained intact. Do you think that flow is only going to increase now, having seen the worst of market correction maybe?
If I see the domestic flow, I mean, mutual funds this year should be able to give anywhere between 65 to 75,000 crore in stock market. Insurance companies should give between 35 to 50,000 crore. Provident fund should give between 5 to 10,000 crore. Retail and HNI put together, and PSU and private sector banks, they'll bring another 25 to 30,000 crore. So you have almost 150,000 crore plus demand from mutual fund, insurance companies, retail, HNI, provident fund, and banks. The supply is only from government on divestment, that's about 30, 40, 50,000 crore, and IPOs and QIPs, which is another 30, 40, 50,000 crore. So you still have, from the potential supply, a shortfall of 50, 60,000 crore. On top of it, if the FIIs are net buyers, you will have more demand and less supply, which should again support the prices.